Hi, this is Justin McNichols with your Osborne Partners market update. Since early July, it's been our thesis that inflation actually peaked in mid-June. In this video, I'm actually going to review our continuing thesis that inflation has actually already peaked, just as consensus continues to worry about inflation going forward. The latest CPI for July that was released today definitely shows signs that inflation has peaked. Inflation is now likely to continue a glide path toward normalization over time. And I'm going to walk you through our thesis again. So what happened to CPI in July? Well, the consensus expected the headline CPI to be as high as 9%, with the core, which excludes food and energy, being as high as 6.5%. When the release came out, the actual July CPI was 8.5% headline and only 5.9% core CPI. Much of that had to do first with energy prices being down 4.6%, which helped the headline. And then things like used vehicle prices started dropping after a very steep climb over the past year or so, which helped the core come in below expectations. Now, shelter continues to be up in the CPI reading, but historically that's a lagging reading, lagging indicator, and we believe that will start to fall in the next couple of months, which will pull CPI down with it. So let's review our thoughts on why we felt inflation had peaked in June. Well, mainly because of commodities. A number of commodities, most commodities, quietly peaked in June as investors continue to be worried about high inflation. We're going to give you some examples here. First is a hard commodity, steel, which is down 45% in 3 months. Next, a more soft commodity like corn has fallen 25% in 2 months. And then, of course, what a lot of people talk about is gasoline and how expensive it's become. Well, it's fallen 30% in the past 2 months. So that, coupled with oil falling 25% and continuing to be in what's called backwardation, where shorter term prices are more expensive than prices out in the future. When you see that, the majority of the time, oil prices will be pulled down further in the future. So there's really a headwind against oil rising seriously over the next couple of months. So all those examples I gave you really show that inflation has been stopped in its tracks, especially from the commodity side. So what now? Well, investors have been bearish throughout 2022 for a combination of reasons. First was high valuations. Coming into the year, the thought was a PE of 23 times forward earnings for the S&P 500 was simply too high, especially if the Fed was raising interest rates. Second was inflation fears, which is what we've detailed in this video. And the idea was, and the worry was, that inflation would be stubbornly high. Next was the Fed funds fears about how high the Federal Reserve would increase the short-term Fed funds rate. At the most pessimistic time in 2022, the thought was that terminal rate could be 4.5% or higher. We are now at 2.5%, and really it could come in at only 3.5% or lower. So the final worry was earnings. And again, at the most pessimistic time of the year a few months ago, the idea was profits would plummet as we entered into a moderate to serious recession. Now, next month, we're going to address why these investor fears could be misguided. And we look forward to talking to you then with our next video.